All right, let's go. I just saw Strongman was doing a video on this. We all gotta pile on because why not? I think he's ending. I had to do the fire emoji intro for this one. So what a day. I'd like to point out here's Fabio and me almost a year ago to the date, actually, May 1st, 2003. This was the time I think I went on, like officially went on Capital Mindset. And then I had written articles online also before this, but here it is. A year ago, we were telling you not to buy this stock. This is a troubled company. Just everything about this, red flags, warning, stay away from this company. We warned you a year ago. A year ago. And here we are today. 10% nosedive on earnings. That they beat earnings. And that's what they're going to tell you, the SoFi people. They beat earnings. It's the hedgies. Wall Street doesn't understand SoFi. Wall Street doesn't understand a bank. A bank. I think Wall Street understands what banks are just fine. This is fucking hilarious that you can't stop with this stupid, unimpressive, run-of-the-mill bank. There's like 4,500 bank chartered company or corporations in America. SoFi is not at all. So you're going to just keep underperforming the market if you own this company. So here we are a year later. I'm sure I'll be doing this in a year. Maybe it'll be a penny stock by then, or just it's going to hover around $7. So I just like to point out some stuff. So this is the 10K. We're not even talking quarterly earnings. I want you people to understand, like, this company, you got to stop looking at what they show. So let's go to the presentation really quick. I'm going to try and get done in 30 minutes so I can join Fabio's stream. I don't have a ton to talk about, but we'll talk about this on there. So, like, look at what they show you, right? This is what they show you. They want to show you, oh, look, it's all about, okay, what's the first thing on the presentation? Member growth. Okay, what are the members though? They don't really tell you. Are these members that are using the platform that have used the product, meaning like the loans, credit cards, or are these just people that literally signed up for a Chase or a checking account, put $2 in it to get points that were a promotional thing, and then they bailed and they barely use it? When do they pull customers from this chart? Who knows? So this is like meaningless. This doesn't matter. They want you to think it matters because they can show you it goes up. That's the part. Management is you this. Products, they want to show you this. Remember before Tattooed Chef went bankrupt, they started to say, oh, look at all the products we're showing. We have all these new product lines, right? So we're not just frozen fruit Buddha bowls. Now we're like bars. We're all this other stuff. We're innovative. More products, more SKUs. It didn't matter. They went bankrupt anyways. And actually, that was a terrible decision on their part. Same thing. SoFi wants you to look at that. That's what they're shaking this in your face. Look at the products. But if you look at the note, so products, this is a little deceptive. So every product that a customer has counts. So one person has a loan, mortgage, student debt, credit card, all those services. Every one of those individual products counts in this chart. So they want to then show you down here that they're creating diversity in their product lines because they know that a concern is that they have this huge personal loans, and the whole business is based on these personal loans. So this chart, they're trying to show you they're diversifying away from personal loans, but they're really not. They're sugarcoating what they're actually doing. This is all smoke and mirrors. Like, so do you think if a person comes into hard times, they could have 5 products, the same person? You think they're going to pay any of them? They're probably going to default on all of it. So using this as total lending products, leveraged ratio to services, when if you look at the notes of what products are, one person could have 10 of these product count. So that's a deceptive ratio. I don't appreciate that for what they're doing. Galileo. We'll look at the financials. This is the most unimpressive thing ever. And this is what they're basing their whole idea. They were basing their thesis on this. Galileo, their technology, which we've already gone over. they impaired, we use the right term, they impaired the goodwill from the Galileo freaking acquisition. They did it last year. $247 million impairment of the goodwill on Galileo. Why do they do that? When they bought it, there was an expectation probably of growth. So impairing it means it wasn't, the valuation was based on a certain growth and they weren't fulfilling that growth. So they had to impair the value of the technology. So for a fact, this is failing. Don't let the SoFi people tell you otherwise. This is failing. What they wanted to do with Galileo is not working. It's not working, and it hasn't worked since last year. You're being lied to by these SoFi channels, and you're losing money. And the opportunity cost of not having like an index like SCHG or QQQ, and you're just bag holding this stock that's doing nothing, if not going down. And this is all just like, none of this matters that they're showing you. Like, the deposit numbers don't matter, people. What are they doing with your deposits? They are putting them into personal loans. They are using credit facilities to take out for more personal loans. They are using convertible notes to take equity from shareholders. So they did a convertible note to save $50 million of interest on preferred shares. I think it was like a month ago. And who cares? They diluted you. So, okay, they used equity to pay debt. This is bad. This is always bad. Don't listen to the $1 million savings. Again, smoke and mirrors. This company is just tricking you, and you people keep gobbling this up. It's embarrassing. It's embarrassing. Like, look at this. Look at their profitability. It's just, there's no consistency here. Revenue, like, we've reached a peak almost. Look at the acceleration of growth. So this one right here, the growth is decelerating very rapidly. So we were 50% growth. Very quickly, maybe a year and a half later, we're half of the growth of what they were doing a year and a half ago. They've basically peaked almost. This is terrible because they have big ambitions to become the next JP Morgan, is what these SoFi people tell you. Not at this rate. You're not getting anywhere close to JP Morgan. And the other thing, like, if you read Jamie Dimon's letter, which we went over some of it, if you read Jamie Dimon's letter, he talks about the thousands of AI programmers and engineers that JP Morgan Chase has working on artificial intelligence and different software products that they can use that are innovative for their business. They're not going to do business with SoFi. They're not going to pay a premium even if they did do business with SoFi. Jamie Dimon's working on his own stuff. He has all the cash ammunition in the world to develop his own technology platforms if he wants to. So you got to ask, why hasn't he yet? Maybe he just doesn't see the opportunity yet, because SoFi is not doing much with it. There's nothing impressive about what SoFi is doing with Galileo. To me, that Jamie Dimon would probably even try and get into at this point. They're just developing software and solutions as they go. The big banks they're accelerating, which is you would think, okay, the small banks have a shot to grow because they're smaller, so they can grow. What you're looking at with some of these, the big banks are growing faster. Like, they're accelerating. Wells Fargo, Bank of America, freaking go look at JPM, like, amazing numbers. They have such competitive advantages. SoFi will never be able to crack into those spaces. So what SoFi will have to do, they're going to have to keep doing business in places that the big banks and Jamie Dimon don't care about. Personal loans. They don't want to get into personal loans. Credit cards. They're getting into credit cards. They're going to get smashed in the face on credit cards. They have no advantage. There's nothing specifically interesting about SoFi's credit card. Robinhood is going to probably crush them on credit card because it looks like Robinhood's credit card's more successful. Robinhood's getting more depositor money than SoFi. I don't you're not competing with the big banks, and then your direct competitor Robinhood, I think, is going to crush SoFi in a lot of ways, because SoFi doesn't have as an appealing product offerings as Robinhood, I think, for customers. So I think Robinhood has an interesting product line for customers, like with the gold and the benefits that they're offering with their credit card. Like, this is bad. This has been bad for a year, and I just don't. I've been negative. Fabio and me have been making comments and videos about this for over a year now, and I wait for days like this because maybe it gets through to people. I could make this video when they go up 10%. I would tell you the exact same thing. I don't care, But maybe people may maybe you may pay more attention on a day that's like today. But there are reasons why this bank is terrifying to investors, and it goes down. It's it's just a basket of personal loans, and they're not diversifying away adequately. A little bit diversify away from personal loans, but not in a meaningful way. We haven't even been through bad times. If the unemployment rate goes up, people start losing jobs. Like this thing, I guarantee you, investors are looking at this and be like, "This terrifies me to own this thing." Because this bank, remember, we talk about risk and reward. So you want to mitigate your risk for the reward, or you want to take appropriate levels of risk for the reward potential. So ideally, like say 1 unit of risk, and you have the potential of 2 units of reward, something like that. This thing is terrifying. The prospects of a bad economy, this thing could get obliterated. Their freaking charge-offs for the personal loans could get really bad. So and like here's 10K. So this isn't even the quarter. Like look at the charge-offs. So here's the net charge-offs. So here's personal loans. So here's 2022. Can you see that? Is it too small? Okay. Here's charge-offs in 2022, 1.86%. Look what happened in 2023. 3.42%. So as they have to grow their loan book, think about it. If you have to grow your loan book to grow the business, they're going to have to give loans to people lower on the freaking risk chain or higher on the risk chain. Ideally, they're going to tell you that they're a premium business that only deal with preferred or high earners, and that's all bullshit. But this is terrible. This is just crap. I don't understand the love of people for SoFi, other than it gets eyeballs. We go back to this. People that make SoFi content, a lot of views. That stock goat guy, every video I see was a 3,000-4,000 views. I mean, that's good money for him. All he has to do is bullshit about SoFi for 10 minutes every 2-3 days. We don't even know how much the NBA deal cost. And I'll keep saying this. I don't know if we're even going to find out till the 10K, because it's not mentioned. Here's the financial press release. No mention of the NBA deal. NBA, basketball. How much money did that cost them? Like, folks, maybe if I can dig through this, I can guess, but like it's not specifically explained anywhere. So their credit loss, like provision for credit loss, like it's still, it's like on this one, not too bad, but then you got write-offs or defaults. Okay, we're going to defaults. Did I skip it? I think I skipped it. Okay, weighted average defaults, 4.8%. Like that's not great. That's really not great. Like this company is killing me. These people, I don't understand why people have to detach themselves. You can like SoFi as a product, and you can like banking with them. That doesn't mean it's an investable business. This is a very competitive business, and I don't see this path for what they're doing to scale to anywhere near like a big bank, like a JP or a JP Morgan. I mean, I can pull, and they're not cheap. They're not cheap. We go to SoFi. If I go chart, okay, now we're going to go price to book. Okay, price to book. Now let's go JP Morgan. We'll go Ally. We'll go Bank of America, and then we'll Wells Fargo. What's another one we can do? Robinhood's not really a bank, so let's do Citigroup. Let's do 1 year. Okay, price to book. Like, it's not cheap. Like SoFi before this drop, I think it was at 1.5 before it got obliterated today. I think it was like 1.5 price to book. JP Morgan 1.8, which they deserve a high valuation for the business that Jamie Dimon is running. Ally barely above book. Bank of America barely above it. Wells Fargo a little bit better. Citigroup always been, for good reason, kind of trash. But like it's already expensive. You're not getting it, and maybe people get detached because it's under $10 and they attach sort of value that it's under $10, therefore it's cheap. That has nothing to do with it. Um, like share dilution. Oh my goodness. Um, let's look at this. They're diluting the living hell out of you. That convertible note just continued what they were already doing a few weeks ago. So if we go to, I don't know if it has updated, but like you're getting diluted pretty hefty. I mean, here it is. They're issuing shares constantly. Um, I don't understand the love affair with this company. This is terrifying. Like warning flags. This company has a lot of risk. Here's the problem. I think it's a lot of risk for limited reward. I don't see this being anything. And I know they'll be like, oh, it's $12. Like they just throw $12 out there, which I think is just what some of them, their cost base is what they bought it at. So they're hoping that it can go back so they can sell it and get out. But I think you have very limited upside with a company like this, a financial business like this, and you have a lot of downside. Banks just collapse, right? Banks just collapse out of nowhere. Banks have a lot of risk of just getting obliterated. Look at this thing, New York Community Bank, right? It was going along, and then just boom, disaster, like obliteration. This is what happens to banks. They just get obliterated. Next thing you know, the feds knock on the door and they're gone. So this is like part of the valuation of Wall Street on these banks. Like this is a very unique where the government can just shut down the business, right? Not every, I mean, like Apple or Caterpillar doesn't have to deal with this risk. This is a risk singular to banks. The government could shut them down one day. They show up and they take over the books. And that would factor into how you would evaluate something like SoFi. And I would very, I don't know what else we have to say. We're just going to keep saying, I'm just going to keep putting this out there because there's channels that constantly put out shitty content about this crappy bank and they never stop and they just constantly spoon feed you like these jokers, just constantly shoving this content down your throat for this terrible investment. And I feel sorry for people that believe this. And I know they put more than this is not 5% of people's portfolios. If you did 5%, so be it, if that's what you choose, or 5 or 10%. But we know people aren't doing that. And you're getting annihilated. You probably bought the thing at $12, $15, like some of these guys, and you're bag holding it. If you bought it at $4 or $5, good for you. Get out before you get screwed. But this is, and let's not forget, people, let's not forget this. This man sells you a 10x SoFi investing course. He also banned me. I can't comment on his channel anymore. I didn't even say anything that harsh, and all of a sudden I got banned. So I'm going after him still. But this man will sell you a course on a stock that he's never made money on, because we know that from his earliest videos, this was like over $10 when he was buying it. And he's selling you a course on 10x investing. And he will charge you, I think last I checked, it was like $375. And he said he only was doing this so he could recoup money. He doesn't even give a shit it's quality content. He just wants money from you. So here you go. You want a 10x stock investing course on a company that's losing money. This is a SPAC, so it was $10, and now it's $7. So it's lost money forever. And here's another, I'll show you. So he borrowed money to buy this company. We can't forget this. He borrowed money to buy SoFi in 2022. So he's probably bag holding. He's missed out on all the market gains that we've had holding this stock, right? You could have bought a CHG or QQQ. I mean, I bet you a bank freaking ETF would have done better than what he did. It's just unbelievable. And you guys eat it up. Why? Because he looks smart. He's a dork. Like, oh, believe the guy that looks like a dork. Oh my God. What is it? Buying bank stock is like buying bonds with equity risk. There might be a few exceptions, but SoFi ain't. Strong man. I need a personal loan. Like again, like if I need a personal loan, I'm going to fucking SoFi. I probably, what do you fill out like 3 minutes and they give you money? That's great for you, the customer, but that's pretty terrifying if I'm going to buy the company, like stock in them. They're so fast to fund people. And we just saw the charge-off personal loan rate is increasing. So don't let them sell you on their software having any unique abilities or AI that can screen people more effectively than other banks. There's no proof there's no proof. And now it's increasing as their loan book gets bigger, the charge off rate, which proves they don't have any competitive advantage in that sense. So you just have this big basket of personal loans and student loans that are high risk assets and loans to carry, because there's nothing backing those loans. People will default on those, and the bank's just going to hold the bag. There's no car, there's no house to repossess, nothing. Um, this is just such a garbage investment. Of all the things you could buy of all the things in the possible realm of buying as a speculation on in the U.S. stock market, like, at least I understand Palantir. I get it. Like, I get why it's a speculative. I get it. Like, you've got the reward potential of a business like Palantir. I get it. It's risky, but you also have the upside with that risk. No doubt. This, like, I don't get it. I don't get why this is so interesting to you people out there. And you're going to get your cheeks clapped still. It's been a year of misery, and I don't see it getting any better. I don't see how this company improves at all. I think they're hiding things in their reporting of these loans. Some of the stuff I was looking at the 10K, I don't really have much time, but it's kind of concerning how they value some of their products. I don't know. Maybe I'll do a longer video to talk about it, but I am very concerned about something like this, because they're trying to grow and grow and show that they want you to have the optics that they're this fast growing, high demand, increasing members like crazy. Galileo's coming off the shelves, like constant business. And it's just not that. If we go, I'll show before. Wait, am I on the 10K? Okay, let me go to the presentation. So we'll finish with the presentation. Okay. So loan origination. So, like, if you look, like, they're still so heavily student loans. Like, it's barely lowered the percentage of total loan book, like, recently. If you look at like 23 to 22, or if you do, like, there's still vast majority student loans. They diversified a slight bit. I'll give them that, but very unimpressive. Now look at this, like, so here's their technology segment. Like, growth is like capped, like stagnant, 30. The revenue or not revenue, but like actual profits from it, right? Stagnant. 30 here, 30. This is millions, I think, right? 30 million, 30 million. So there we go. We've hit a brick wall in growth on that. I don't understand what is so special about this. And here we go. Okay, I gotta read the financial services segment. So profit, right? I don't care about the revenue. Like, let's look at the profit. How much is it contributing? So this quarter, 37, and last quarter, 25. For what they're telling you, it's not that impressive of growth. So I just keep saying, like, their technology segment is unimpressively growing for what you would expect for a growth company that's rapidly taking market share, is what they want you to tell you. The actual profits of these segments are so anemic. It's so anemic to be your expectation of a company like this. They should be growing way faster, and the growth should be accelerating still at their size, if they are what they tell you they are. And it's not accelerating. So this is the problem. So if I spam the heck out of me, refinance a student loan, offered me very compelling 4% above my current rate. And the other thing, okay, if you're going to refinance with them, like, you're going to lose your federal student loan protections. Like, oof, probably don't want that. The best thing SoFi did for me, ironically, was selling 25% profits for a decision last summer to pay off my student loan. Yeah, I mean, trading it, you could trade anything, right? So we're talking like investing in it. Like, these people are trying to tell you, like, I don't get it. I don't get it. Of all the things you can speculate on, like, this is nonsensical, this company. Let's see. I wish their print was a little bigger. I just looked through it really quick because I just got home 30 minutes ago, and I'm like, there's just nothing impressive about this company. What's kind of funny too is that you go to the bottom, like, they're trying to, like, Isn't it funny that the whole thing is in like black ink, and then you notice they gray out the notes where you actually get the meat and potatoes of some of like the information. Um, and they like it's like blanked out almost. It's like, what the hell? The other thing that's funny, so their technology platform, I can barely even show you this. So the note 3, which talks about their technology platform segment, Galileo accounts, they count intercompany accounts as Galileo accounts in that chart at the top. Intercompany accounts are included in their number of accounts for Galileo that they show you at the top. So interesting little tidbit. So they report product, you could have 10 products with one person, right? But they'll report it as 10 product offerings. But then they're also going to show you Galileo accounts, intercompany Galileo accounts. Okay. So the companies inside SOFI, what the hell are we doing? Like, what are they reporting? This is very like unusual to me and concerning. So, okay, what time is it? 8:30. Perfect timing. So, I mean, we'll keep doing this. Stay away from SoFi, the garbage company. I don't understand why you would buy this company. There's a lot more interesting things out there to speculate on. I've speculated on drone companies, micro cap drone companies. There's way more interesting growth investments out there if you want to be a growth investor, that, you should have the potential upside with the risk that you're taking, right? And that's how Peter Lynch did it. He even said, he was like, I find these small companies and the worst I can do is lose my money. But if they succeed, I can make like 14x my money. I don't understand how you even get there with something like SoFi. It's a bank. It's just a bank. Like, damn, I work as a corporate tax auditor, and those intercompany transactions are looking. Well, I'm a government grant auditor, so I share your concerns about when I see interagency. I'm like, why are you counting that as actual products? Because it's just your own company. So, all right. Well, I will sign off. I'll probably go check Cowboy Mindset out. I'm going to be joining there in a shortly. All right. Y'all have a good day. What outro should I play? Oh, let's play this one in recognition of Kevin, because Kevin day traded Tesla because he's super smart. Okay.
The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock.